Good morning, ladies and gentlemen. Welcome to episode 69 of Ask the Accountant. We are live, as always, from 8:30-ish. We're a couple of minutes late. We were too busy chatting again. From 8:30 every Monday morning, we go live across all your favourite social media channels. And we bring you our insights and thoughts on the industry news, latest tech, etc. So, as always, with every episode, I am joined by my co-host, Mr. Aaron Patrick. Aaron, how are you? How was your weekend?
I'm very good, thank you. Yeah, busy weekend, but all good. And nice to finally get to our episode number 69. So that was...
bit blue.
So we finally made it. We did it. No, it's been a good weekend. I feel like yours had more eventful, though. Didn't you have a nice little trip to Murrayfield?
Yeah, I had a very good weekend. I went to Murrayfield to watch Scotland lose, basically, which I was always expecting them to lose, if I'm honest, but I didn't expect it to be that close and that upsetting and that stressful, if I'm honest. That final try should have been allowed, by my view, along with everyone else. Like, if I ever upset the whole world, I now know what that looks like. Because the whole of Murrayfield was angry. Like, suddenly a lot more police officers turned up and a lot more security guards were around the changing rooms. But yeah, no, I went to Murrayfield to watch Scotland. So Claire's dad, he used to have a season ticket every year, and before he passed away last year, he brought his season ticket for this year. So we took advantage of the two seats and went, and they were fantastic seats, sat slap bang behind the goalposts. And there was no one sat in front of us because it was an entranceway to the lower stand. So it was just a nice concrete wall, and we were just sat there, no one interrupting our view or anything. Absolutely brilliant. So yeah, good day. Like, you kind of realize how much you miss. So I'm guessing this is going to be the same when we do the Silverstone later this year and go to the F1, of when you're sat there in the stadium, there's no commentary. Like, you sat there trying to work out what's going on the pitch. Like, someone got injured and there was the whole golf buggy came on. It's like, oh my God. But you didn't know what was going on. Whereas if I was sat watching that at TV, I'd have had complete insight to what was going on and background. And when the ref was deciding on something, you couldn't tell what he was saying or anything. Whereas on TV, they're all mic'd up so you can hear it. So yeah, the atmosphere was phenomenal, but it was a weird sensory kind of deprivation kind of thing where you didn't really know what was going on because you didn't have all the information coming in that you're used to. So yeah, interesting, very interesting.
You weren't tempted to stick on a headphone and just listen to the commentary? That's what
didn't take them with me.
Oh, did you not?
No. If we do it again, we'll probably get one of those. You can get like a radio headphone that tunes into the commentary. But yeah, we didn't take one this time, but we might do in future. But yeah, no. And then I spent yesterday relaxing, scribbling out new ideas for client engagers onboarding process, which we are starting in earnest today with our planning sessions for that. But yeah, so, and you were playing with tech most of the day yesterday, judging by all the pictures you kept sending me.
Yeah, we've got some big events coming up, haven't we? So I've got I'm going to go and help a fellow accountant do their second podcast, is it? Set them stream up on Thursday. So it's that whole idea of proof of concept of what we do, but actually when we do it, we can kind of feel a bit like we can test around, play around with a few things, right? And if it doesn't work, it doesn't work, right? We're comfortable, and our community is happy enough to kind of accept it's not going to be perfect each and every time. But when you're doing it for someone else, suddenly it ramps up in terms of expectation and everything else. So yeah, I've been spending my time just making sure that that kit is absolutely nailed on, ready to go. And also been trying to figure out how we can streamline our process, because we're going away. It's only 2 weeks now, isn't it? Until until we're at QuickBooks Connect, or Get Connected, shall I say? Get connected. No, Get Connected.
Get connected.
Yeah, down in London, and we definitely want to do a bit of podcasting while we're there, right? So we want to be talking about the event itself through QuickBooks Labs, maybe get some Ask the Accountant podcast there and then while we're out there, maybe some cool friends or something impromptu ones. But the problem we've always had is for us to actually do that, we've literally been lugging around ridiculous among.
I mean, how many suitcases did you have to write off last year and throw away because of the damage?
3 of them. And yeah, and it was just like, even when I was in the car, I was then having to like lug from the car to the venue, and I'd actually, because we were overcomplicating it, that's where we had like technical issues and there was some problems and everything else. So yeah, so I also spent the time just going, right, let's streamline it. And literally I've been able to get a whole podcasting studio into a bag like this big plus a laptop. So I'm well happy with that. And I think that's just it just means we can be more dynamic, right? Like we can be more reactive and just put together some piece of content there and then, reacting to what we see, right? Instead of, oh, we should have had this kit, or give me 45 minutes to set everything up and then we can have a talk, and then another 45 minutes to de-rig. So no, I'm looking forward to it. And I think that's what we need to do, right? We need to kind of make the most of it and trying to be a bit more be more reactive than we are. So yeah, it's good. It's good. I'm looking forward to it. And I think we've nailed it now. So I'm more than happy with it.
Cool. And you know what? That's one of the things I did. I spent a lot of time on Saturday. I should have been watching the rugby, but I was actually watching all the cameras on the wires and the cameramen walking around on like a side harness thing where the camera just sits on the gyro and it's just constantly steady. And yeah, there's a lot we could do.
I think we can
make
do it
more portable and stuff. So
FAB and Accounting Web, Account X, here we come. Like, you know, I've told you before, we'll have a little wire going between the your little DJI thing going across
4 different drones.
Yeah, exactly. AI driven, obviously. We'll just let them go off and do what they need. What could go wrong?
I think we're going back to the overcomplication part, aren't we?
Yeah, probably.
Brilliant. Right. Well, let's before we get into all of our topics, let's say hello to our community, our listeners. So, good morning to Natasha. Good morning to Sue. Good morning to Louise. Good morning, League Saints. You've got a question. We'll come back to it in a moment. Good morning, Kirsty. And good morning, Paul, as well. Hope everybody is well on this beautiful Monday morning. It's dry, it's crisp, but cold up here. But yeah, right. So let's answer League Saints' question first, shall we? I've got a new client. A previous accountant set them up on Zero. Oh dear. And Dex. Oh Christ. They use Zero projects. Whoa, that's expensive. Does anyone know if Dex can allocate expenses directly to a project? Online searches are inconclusive. So I feel that it's a yes. However, it's manual. So you can't automate any rules to push for Dex to go, this is a receipt from Screwfix. All Screwfix receipts should go to this category on this project, etc. So I believe, there we go. A Zero expert is in the room, Miss Sue Green. Good evening. Good morning, Sue. So Sue has said, no, not direct into Zero. So yeah, so you cannot do that, which is odd because Dex and Zero have always been very close, and Zero's always got the first wave of developments from Dex, and then they come to QuickBooks users at a later point. But yeah, so there you go. League Saint. You cannot do it direct to Zero. So I imagine what you'll have to do is the document goes in, Zero, Dex creates an expense or a bill, and then you can push that into Zero and then allocate it to a project from Zero, would be my thoughts.
Yeah. I wonder if HubDoc's going to be any better suited for this. I don't know enough, so
I've not played with HubDoc in years.
Yeah, we're kind of talking from lack of experience, unfortunately, when it comes to Zero. But I know that with HubDoc being one of Zero's actual solutions, I would imagine there'll be a better form of integration. You would have thought so, yeah. But saying that, even from a QuickBooks point of view, their QuickBooks.
Oh no, Sue says HubDoc's even worse.
Oh, okay, brilliant. Well, that's answered that question then. Fantastic, thank you, Sue. Well, yeah. I mean, what can you say? But yeah, with it, I mean, you kind of find it would be really difficult for them to have that integration because I can't imagine the APIs are going to be all that strong and everything for an add-on and everything else. So
yeah, I mean, I also question the efficiency side of it. Like, you can't turn around to Dext or Auto Entry or any tool really, and go, any receipt from this company automatically goes to this project, because the chances are you're buying stuff from that company for multiple projects and multiple reasons. Like you just can't create that rule. So you'd always have to put it into Dext and then go in and manually allocate it to a project, even if they could do it.
Would using the new Chrome extension be the better route for this one? So you're getting all your information in.
I've not tried it.
Yeah, but if you've got all your information in there and using that Chrome extension, because from memory, the Chrome extension has a little link directly to that to the transaction in QuickBooks, right?
Yeah.
In Xero. So the idea would be that because it's a processing issue, right? So the information there, you process it, then you press your link, taken directly to the Xero one. You're doing 90% of the work via Dext, and then at that point you can then allocate it to the right one.
Yeah,
it's a bit of a clunky workaround, but I feel like that's probably the best way of doing it. The only other option I'd say is deep links through. I know you can't really do deep links in Xero, so no, it's not applicable any other way.
Yeah, projects in any FMS solution has always been a bit of the huge potential, but actually to get the data into them is just labor intensive, and it's whether it's worth it or not. And then Sue's just come back basically confirming what I was suggesting earlier there. So best to put into Dext, send it as a draft, and then allocate it to a project. There we go. Thank you, the Xero queen that is Sue Green. Oh, look at that. That even rhymed. Yeah, if anyone's ever got questions about Xero, just drop Sue a link. She's a great trainer of Xero. So, you know, admittedly, it's the wrong product, but, you know, someone's got to train Xero, right?
Yeah, exactly. Can't win them all.
Right. Good morning to Ashley. Good morning, gents, and good morning to Suzanne as well. Thank you for joining us live on this wonderful Friday morning. And League Saint says, "Thanks, Johann, Aaron, and Sue, for your help with that. You're more than welcome. That's what we're here for. That's why we
got there in the end
originally, right? That's exactly why we set this podcast up, and that actually brings me on to a lovely little segue into." We're picking up a lot more followers. We've got a lot more listeners, subscribers to the podcast, etc. So we thought we'd do a bit of a reintroduction of ourselves. Now, you know, people like Sue and Ashley and Kirsty and Louise and Suzanne know full well who we are. But for those of you that are tuning in, maybe this is the first time, and you just saw it was episode 69 and had a giggle and thought, let's find out what that's about. Yeah, let's have a bit of a reintroduction, shall we? Because we never really properly introduce ourselves on this podcast, because we go on the assumption everyone knows who we are. So, Aaron, tell us about you.
Do you want me to do my full intro or my... I'm not joking.
We have only got 40 minutes.
Yeah, I was always told when you've got introductions to do, you're supposed to be able to say them like that and go through it. So I've got my whole preempt introduction that I go through and do, but I won't bore you with that one. So yeah, I mean, from the reason we started this was all about trying, like you said, trying to get that community together, trying to bring it forward, because basically me and Jan have we've done, you know, this whole online persona. We've been building up our personal brand. We've been trying to get ourselves into the whole space of YouTube and everything else, and that's where I came from. So all mine was all driven by the fact that I was really finding a nice little niche in my QuickBooks chap YouTube channel, and we're getting an opportunity to really start to build a nice little personal brand from that, and have an opportunity to get a little community together. And the idea was that, well, I've got that community. Jan will talk about in a moment how he built his community. And it was like, well, why don't we kind of combine the two? And that's where Ask the Accountant came from. When it comes to kind of building the community, though, I tell you what, it's been such a different aspect in 2024 than it has in the rest of them already. And we've only just started the year, right? Like, it seems to be that every year you've got to adapt and change the way that what platforms you use and what content you're putting out and how you put that content out and the cadence of the content. I was always quite comfortable in 2022, 21, that sort of year of I was doing everything right, ticking all the right boxes and growing a nice rate and all that sort of stuff. Then 2023 came along and it all went a little bit stale almost. Like that's how it felt like in terms of the content and everything else that's coming through. And then 2024 got that kind of injection in and bump that I needed to. And now I'm having to rethink the whole rule book on how I produce videos and what content to put it on and what platforms to put it on and everything else goes there. We've talked a lot, haven't we, about how, or off air, about how TikTok's going to be such a huge platform that we've got to keep an eye on. We're not quite there yet, not quite ready for it, but we've got to be ready to make that jump at some point that comes through. So yeah, from my point of view, from a online persona, it's all about QuickBooks Chap, and that's always been my main goal and everything else. But because I also own a practice and I do QuickBooks training and I love tech and I've got the opportunity to talk about it on a platform like this, that's kind of where we've been able to find our community. It's if one of those, if you're a practice owner or you're a someone who likes tech or software or anything else, that tends to be where we've been able to have the most impact, isn't it? And being able to have the most amount of conversations that go forward. So yeah, that's kind of where we've developed ourselves so far. But it's ever changing, and I know you put if you look at your 2023 social media presence to 2024 already, that's completely changed, right? Do you want to talk about that?
Yeah. So I built my original audience on LinkedIn, and this, put out a post in the summer last year type thing, and I would easily get 4, 5, 6,000, 45,000 impressions on one post alone when I was destroying Dext for their new pricing methods. But over as we got into the latter part of 2023, the LinkedIn traction started disappearing due to new algorithms in LinkedIn. And I kind of had a bit of a wake-up call from that of, I can't rely on one platform. I need to diversify. I need to have potentially the same people on different platforms or different people on different platforms as an audience. So yeah, I think what I realized last year was basically what everyone had been telling me, and I'd just kind of gone, "No, it's fine, it's fine, it's fine." You ignore these problems until it's actually a problem, don't you? If you're only got a one platform for your personal brand, as it were, then you're at the mercy of that platform.
Yeah.
So now I will put out a post that this time last year would have got 5,000 impressions and 30 or 40 interactions, like likes or comments or something. This year, right now, I can put out a post and get the same amount of interaction, same amount of comments, but it's only seen by 800 or 900 people, which it's great that LinkedIn have turned around and said, no, we're just going to focus this on the people that are actually going to potentially interact with you. But actually, when you're trying to spread the word, you need the impressions, not the interactions, to be the quantitative marker. So end of last year, you and I had several chats so I could pull on your experience. We trialed a 14-week run of weekly day in the life videos for me, because I had so much going on for the last quarter of the year. That was bleeding hard work. So over the Christmas, New Year period, had a rethink about that. But I'm actually having a complete rethink about my own personal brand and what that actually means now, rather than just, oh, my name's Johann. I've got my accounting firms. I've got Client Engager. I work with QuickBooks. I work with Apron, whoever it is I'm working with. It's like, cool, but why? So I've had a bit of a rethink, and I've come up with some principles of what I'm going to do and how I'm going to do it. So I'm going to make sure that I'm only talking to people, my audience, about things that I'm doing and using in my day-to-day life of work.
Yep.
So this year I started doing a weekly bit of tech video. So the Claude Note, power banks, QuickBooks working papers, all tools that I use in my day-to-day life that are really powerful and beneficial to me. And then I'm going to do a monthly day in the life video, because normally I'm at an interesting event or something once a month. And then on top of that, I'm not just relying on LinkedIn anymore. In fact, LinkedIn's kind of got a bit stagnant for me.
Yeah.
Even though I'm still posting regularly, same content I always used to post, but the algorithm's just not on my side at the moment. I'm not a selfie person, so I'm not going to be going down that route. But I am now starting to diversify into Instagram and TikTok and YouTube. And YouTube's by far the fastest growing for me, which is great. TikTok is interesting. Like, I'm never going to be this guy that sits there dancing or stands there dancing on a TikTok video. It absolutely irritates the hell out of me. I cannot stand it. I think it's absolutely demeaning and irritating and all of that good stuff. But any content I create for YouTube will go onto TikTok. And at the moment, like, the video I put onto YouTube this weekend had like 35 views, but the people are watching it all the way through. TikTok, nearly 6,000 views, but most turned off after 3 seconds. Because on TikTok, you scrolling past my video is an impression. On YouTube, you have to click into it and watch it to get the impression to start with. So still learning different platforms and working out what will and won't work, whilst trying to be efficient and not have to redo everything every time for different platforms. But I've got the wonderful Katie now helping me out. So Katie, I've brought on a few weeks ago as my social media manager. She's knocking it out of the park. My content output's gone through the roof because of it. So yeah, it's an interesting time. I think people get hung up on, oh, it's a personal brand. This is my platform of choice. That's it. Done. You've got to keep moving. Like, I think Ashley Leeds has been Mr. LinkedIn for a couple of years, and he does a great LinkedIn live shows and stuff. He's now going onto YouTube to try and diversify his audience and go to a bigger audience, because LinkedIn's just not very favorable to lives and videos and stuff. So, even Mr. LinkedIn is looking to diversify to different platforms. And I think we should all, anyone that wants a personal brand, we need to be on different platforms to do stuff like that. And just to grow a bigger audience. And if you can do it efficiently, like, I filmed one video, I can now put that onto YouTube. I can push that onto LinkedIn as a link and stuff. And no, it's not going to get great traction, but it's there. I can put it into TikTok. I can link it into Instagram. I can do lots with it to get the traction. Whereas if I'm having to film different things for different platforms, then it's a nightmare. So I try and keep my new videos under 10 minutes, because anything over 10 minutes can't go onto TikTok.
Yeah, exactly.
So you just, it's interesting. But yeah, basically my overall goal is to inform people of what I do and how I do it. One of the comments I get all the time is, how do you achieve so much in your working time? Because I am running 4 different accounting firms, a software which is just going through the roof. Like, Client Engager had 25 new trials taken out over the weekend, which is just phenomenal. We crossed the 500 firm barrier last week that are paying and using Client Engager. We're constantly busy with that. Plus, I podcast with you every week. Plus, I create social media content. Plus, I work closely with softwares in the industry to help beta test and influence ideas and stuff. The way I do that is efficient ways of working. I use the tools and gadgets around me to the best I can, and that's what I want to share with everyone. So I will only be doing videos on and content on stuff I actually use in my day-to-day life, and I can kind of go Johann certified, as it were. But yeah, it's constantly changing. You can't take your eye off the ball when it comes to personal brand. That's the thing I've learned in the last year.
I think my biggest takeaway, though, is that whole idea that, for me, it was drummed into me that LinkedIn's got to be the place that you've got to be on. You've got to go for that. You've got to go, and you're almost chasing that golden goose, right? And I at the very beginning, for me, when it came to even, I wasn't even interested in building a personal brand, really. I just wanted to get content out there and start helping the practice and everything else. And for me, I always went for the platform that I understood and I consumed, which was YouTube. And that's why I moved on to that and pushed that so hard at the very beginning, and still do. But it is interesting that LinkedIn is still, there's still so much, it's still so complicated, isn't it, in terms of the movingness of it. And it doesn't seem to be, there's not enough kind of, okay, if you do this, then within time, you're guaranteed to get a little bit of traction out of it, because it moves so quickly and so frequently in terms of their algorithm and what their output, like you said, like going from 9,000 impressions to 800, things like that make it really difficult to feel like you're making any form of headway in there. And I also would say that, like, the amount of work needed to build your community on LinkedIn is so much more difficult than any other platform. Like the rest of them, it can be very much you are judged on your content that you produced, right? Like TikTok, LinkedIn, Instagram, it's all based on content you produce. That becomes quite a nice and easy way then for a community, for someone who wants to follow you or not follow you, they can make a decision like straight away, right? In LinkedIn, it's very much a case of you constantly having to put some sort of content in there, and then community, and then make, and then you've also got to answer questions and put pros news questions and comment on other people's there's just so much more to it. It becomes a much more, it's much more an investment, isn't there, into that. And like you said, they don't like just reusing content, which I don't see the danger or the problem from my point of view. Like if there's already a bit of content that, another platform's found quite useful and it's got quite good traction on it, surely it's only in LinkedIn's benefit to then grab that content and go forward. And it never seemed to be that way. It's always like, oh, no, if you didn't create that content on this platform, we're not interested. Like that, they just want their own inclusive, don't they? So I wonder if this is kind of it's going to shift again. Like LinkedIn got its resurgence, it got huge, and a lot of people went in. I wonder if this is the start of, okay, LinkedIn's always going to be there. It's never going to go away. It's never going to be anything other than, relevant. But is it this time for the rest of the other platforms to become more relevant, especially in our industry, in the accounting industry? I feel like there's got to be a shift at some point, hasn't there?
There's some great benefits to LinkedIn. So you can either use LinkedIn to build your personal brand so you're recognized as an expert in the area, and that gets you speaker gigs, etc., like you and I have done in the past.
Yeah, agreed. Yeah.
Or you can build a personal brand to get clients. Now, the headache there is most of those clients come on board because of the Aaron factor or the Johann factor. And then they find out actually they're not dealing with you. Oh, actually, I'm not so interested. Or the moment you start spending time on other stuff, they're like, oh, hang on a minute. I came because of these factors. Are those factors anywhere anymore? I don't know. Or if you leave your company, technically, like a lot of clients will potentially leave, even though you might not have had any interaction with that client in 3 years. They'll still feel like, no, I signed up because of Johann, or I signed up because of Aaron. And that's why they're there. So you can grow a very good client base from LinkedIn, but it has its risks for the firm. And it also has its risks. Like if you want to sell your accounting firm in the future, like it's hugely potentially detrimental that it's built on the Johann factor or the Aaron factor. And you can't really push the firm factor across LinkedIn easily. It needs to be a person, an individual, and that means that your fate's tied to that individual. And yeah, life gets in the way for individuals. Like changes happen. So yeah, I think LinkedIn's always going to have its place. And if you build an audience on LinkedIn, you will easily start getting recognized to speak at events and stuff, and that's brilliant. But if you want more of an evergreen thing, and then you need a wider spread of social medias.
Yeah. And I think one of the things we've definitely seen now is that there was almost like LinkedIn's the only place because it's the only one that can accept our content to a point, right? Like it's the place to be a thought leader. It's the place to talk about, problems and issues and solutions. And that used to be, because it was more conversational, right? That's what LinkedIn has always been, and that's what its benefit will always be, and that's what its strength is. Whereas I feel like some of the other platforms are now starting to give more, there's more room for that sort of elements to it, right? There is more opportunities. They've kind of seen that that to make a platform that's going to be everlasting, they need to be able to be more accepting to everything like you said before, like it's not just dancing around. There is opportunities there. So I feel like the other platforms are starting to mature a bit, which I think is to our benefit, isn't it? And I feel like that then causes the question you've already brought up, and the one that's going to be even more tricky for us is, well, then how do you manage content on all of the platforms at all of the time and be relevant there? And do you need to? But yeah, I feel like 2024 already has started to showcase the fact that if you're not at least trying to be involved in the other platforms, it's going to be even more difficult to become, relevant on those later down the line. It's a time game, isn't it? And it's about how much content you actually put out on there that's going to be there. And I've definitely not made it. I've made so many mistakes in the past.
Oh yeah.
We
both have.
Yeah, my YouTube channel in 2023, one of the worst years it's ever had. Like I didn't have I was concentrating so much on just making sure I hit the output and make sure that I was hitting that, because that all in the YouTube world, it was all about just making sure consistently you had a video there. That was it. You got growth out of it. Now it's back to you've got to make sure that the content is what your community wants to see and wants to interact with and wants to get growth out of. And I feel like, that's been a wake-up call for me. But what that means is then I can go, right, let's concentrate on content that's actually relevant and worthwhile and actually, not just ticking boxes for the sake of ticking boxes, but actually gonna have a better impact on the channel. But then it's then grabbing that content, like you've already said, and going, right, how do I then repurpose it? And that's been a big wake-up call. And the more times you repurpose that one piece of content, the more beneficial that content is, right? Like it makes that investment even more worthwhile if you're not just like increasing your main platform, but you're actually going there and actually utilizing that same content on previous ones. And we've not got it right yet, but even just using AI just to help you create short form content actually is so powerful, isn't it? Because that turns that one piece of long form content in that we've already put effort in to do into stuff that can actually grow and start getting you new traction as you go forward. So it's a really interesting time. And I feel really sorry for anyone who's starting out now. I feel like now it's even more convoluted than it ever has been. But before it was very much a case of find a platform you're really comfortable on, excellent, and start from there and understand it and grow. But now it's like, well, yeah, you need to find that platform you're really good on, but at the same time, really should be concentrating on at least putting some content on this one and some content on that one. And yeah, it becomes an absolute nightmare, doesn't it?
Ultimately, like if you create a personal brand on one platform, and that platform, so let's take TikTok, for example, right?
Yeah.
Up until recently, TikTok's always been about shorts. It likes music. It likes dancing around, a bit of silliness. Like that's what pushes views on TikTok. If TikTok scraps shorts and started going long form only, they wanted to tackle YouTube head on and go, right, no, 5-minute plus videos, and we are going to penalize anyone using music, and we are going to we want a more informative, educational, quality platform. There's a lot of people out there whose brands shut down overnight because of their decision, and those people can't sway the TikTok direction at all. Now we know TikTok do want to go down that more professional, educational route with long form content, and it's not quite there yet, but we are kind of getting ahead of that. We're putting our long form content onto TikTok but at the same time, if TikTok decide actually, no, we've decided not to go down the long form content, it's not an impact for us because we've still got YouTube. In the same way that if YouTube decide to change something, potentially we're scuppered. Or if LinkedIn decides actually now we're going to promote video and we're going to really push for lives and stuff, and we're going to really help you with our algorithm on that, then actually we could do really well out of that, whereas at the moment it's a bit of a challenge. So by building your personal brand and your content on just one platform, you are subjecting yourself to their will. Like a lot of people used to say, oh, build a Facebook group on Facebook. That's the way. That gives you a whole marketing pool. And then Facebook started changing some rules, and all of a sudden, those groups fell apart, and they were worthless again. So, like, a lot of people I know will always say, "Do what you want, but if you're doing this for marketing purposes, capture their email address because only you can like influence what you do and don't do with that. The softwares aren't going to influence how you market to someone using email. So your email list should always be your bedrock." Now, in theory, could you and I start doing a weekly blog based on these episodes and email it out to everyone? And then that might remind them, actually, I can't be asked to read the blog, but I'll go and watch the video back.
Yeah.
Potentially we could do that, but it's a huge time-consuming effort to do it.
Yeah.
Even using AI, you still have to proofread it all because AI is not great for, especially when there's two people involved. It still has its issues.
Yeah.
So yeah, I think that's the one thing I've seen over the years is you cannot rely on one platform, and you need to try and build multiple platforms at the same time.
Which is definitely the plan, and we've always had it, right? There's always been changes that come along that's completely scuppered plans, or platforms have changed between one, and LinkedIn's changed so many times, and it will continue to evolve, right?
Yeah.
And it is an evolution. There wasn't such thing as YouTube Shorts back in 2-3 years ago, whatever it was, right?
Yeah.
It's an evolution. It's them trying to tackle the emerging
And
threat.
they made announcements last week about how they're going to try and get the algorithm to be more supportive of AI generated content and stuff. And it's like, okay, like they're constantly evolving and making announcements, and it's hard to keep up with them all.
But even your point about the email list, that was brilliant until GDPR came along, right? And then suddenly it became, and it was another moving goalpost, right? That you had to be compliant on and keep an eye on, and it went from there. And the ad campaign when Apple decided to make it so that it wouldn't be as targeted anymore, and there's always this moving goalpost. I just feel like the problem we have at the moment is that there's just so much content out there that we need to, or platforms that we need to try and be relevant on if we can, if we want to build that, if that is something, and it's all personal preference, right? Like, I'm not someone who cares about massive amount of numbers or anything else like that. It's just about, well, if I'm going to make any form of content, if I'm going to put any form of investment in there, I want to at least try and get as big a return of investment in that as I possibly can. That's just sensible, right? That's just you being a typical accountant looking at a spreadsheet and going, right, I spent X, what did I get out of X, right? Like, that's as simple as that. But I just feel like now that we're getting to the point where there is actually starting to become barriers of entry straight away. Like, there is this if you're not doing content that's this and this, and it's around this sort of element, and it's got this part to it and everything else, and you're going to be left behind. Like, short form content has never been a strength of mine, and that's hampered my progress massively lately, right? Because short form content is the king content at the moment. It is what everybody wants to consume. It is what people want to bring in. And I feel like if we don't adapt our skill sets to making short form content that's relevant, I think that's where we're going to struggle. On the flip side of that, though, one thing that is positive at the moment is that, and you've shown it massively in your recent, glow up in your social media world, is, what, short form content can be something other than dancing around. There can be other opportunities for there, and I feel like we're still learning that, and we've not matured as an industry yet in terms of what our short form content can be. But I feel like there's enough people in the community that can showcase the way of, actually, this is where accountancy short form content can go going forward. So yeah,
short form content, it's not everyone. Like, even if you sit and watch as a fly on a wall in my lounge on an evening, my wife's there scrolling through short form videos constantly on Facebook and whatever platform she's scrolling through them, and giggling away every 60 seconds at a different video, whereas I'm sat there watching an hour-long YouTube video or about a documentary or about a 20-minute software review on something or something. Like, I prefer the long-term stuff, the long form. She prefers the short form. So there's always going to be an audience for both.
I just feel the majority is short form now, though, isn't it?
Yes, that's the problem. Is the majority is short form. But it used to be the majority was long form. It used to be the majority of people preferred a written blog to a video, whereas actually now that's really changing to, if they're going to consume that amount of information, they prefer to do it on a video where they can listen and do stuff and watch at the same time.
Yeah.
Because that's more efficient. And other people will go, actually, that's great, but can you break that down into 10 short form videos? So there's always going to be an audience for your content, but sometimes your numbers aren't going to stack up to other people's purely because your content form is slightly different to what the majority of the audience wants.
Exactly. Speaking of the audience, shall we just jump into
let's tune back into the audience of Ask the Accountant. So we've got Dave joining us. Good morning, Dave. You signed up to Client Engager. Good choice. A couple of months. Is it possible to book a demo? Yeah, Dave, just go over to our website and you can book a demo from the top right-hand corner of the website. There's now we've now doubled our demo slots from what we had, because we were booked up until late March. So we've now opened up 100% more demo slots so that we can try and deal with some of the backlog, and we'll go from there. Good morning, Paraf. How are you? Paul's got a problem. Here we go, QuickBooks chat. Are you ready? Question. I think I've come across a limitation on QuickBooks. A client gets supplier statements. We process them monthly. However, when we get over 250 bills, QuickBooks pay bills, receive payments solution can't cope. As a workaround, we're processing the statement, processing the SC first, then the bill payment second. We use auto entry to process the statements, but do we have a solution? Would consider third party. Mr. QuickBooks chap, what are your inputs on this?
Well, I would say it depends what version of QuickBooks he's on. I imagine he's not on QuickBooks Advanced, but it's a big price increase. But that is what that platform's for, right? It is for stability. It's for
Growing Plus. You're ready for Advanced at those volumes, yeah.
It's just and it's a really bitter pill to swallow, isn't it? Because it is an increase that's quite substantial, but that's what the product's designed for. It is designed to have much more intensive amount of data in there. And for what we've seen and what's solutions we've seen, it doesn't have any or doesn't seem to have limitations for people. So I do feel like that's going to be one. When it comes to third party, though, maybe this is where Apron solution would come in quite powerful. When it has its own snap feature when it comes through, and all that comes through. We've not been able to really push it to those sort of limits, so we don't know if there is a hard or a soft limit on it. I can't imagine there will be, based on what Apron want to build, right? I think if anything, this is what Apron want to tackle. It is these sort of scenarios where it's a lot of data and it wants to be able to process it, make payments, and everything else that goes with it. Like, that's what Apron does best, is trying to find ways in which they can solve problems. So yeah, I'd imagine have a go and maybe Advance. You can always downgrade later, see if it's making an impression on it or not. But then you've got to make sure that the client's willing to take off that extra subscription, or you absorb it into your services, however it works. But that's kind of where I would look at it. What about yourself, Jan?
Yeah, no, I think QuickBooks Advanced might be the solution you're looking for. You've kind of outgrown Plus by that point, and QuickBooks Advanced should be able to handle those volumes. Question, Aaron. When did QuickBooks Advanced go up to £90 a month?
I know that's part of the new price increase. Yeah.
Okay, because it was 70, wasn't it? I'm not going completely
mad. Yeah.
Cool. So it's QuickBooks Advanced. It'll be £45 a month plus VAT as an accountant. Like, if it's going to save you a few hours a month, then I'd say that's a justified investment. And if that's offsetting the time you're spending on it, so actually you don't need to increase the client's fee, then brilliant. Or if you want to increase the client's fee, then do that. But yeah, I think QuickBooks Advanced is probably actually the solution you're looking for there, Paul. I think it will handle that kind of volume of data, no problems.
And I know it's not there yet, but they also, the use case for that QuickBooks desktop app that they've been trying to push lately, I still feel like it's not quite there. There's still a few bugs that needs to iron out, but the whole point of it was for stability. The whole point of it was for power users. The whole point of it was to try and help situations like this. So keep an eye on the desktop app as well. Maybe that's that will solve your issues and go forward from there. So yeah, I've only ever come across a handful of times where we've kind of hit those limitations, hit those problems. But yeah, when we jumped onto QuickBooks Advanced, most of the time it's been absolutely fine.
Cool.
Do you think Apron will ever, is that what it's aimed at, or do you think it's more of a smaller?
I think the Apron might deal with it in the long run. It's not there at the moment, and what I'm seeing of Snap, it's not going to be there straight away either. Like they're at the start of that journey. They're just dealing with documents coming in right now. What they could do though with statements could be phenomenal, especially considering you go from invoice, purchase document to statement, then to bill payments, which they've already nailed. Could be phenomenally powerful. It'll be interesting to see what Apron bring out for that. Watch that space. AJ says, create once, use many times. Good tip. Yeah, you've got to work efficiently in this world, and that works for me. So you just try and take as many factors into account. So like, I know if I want to put it onto TikTok, it's got to be under 10 minutes. So I create as many of my videos under 10 minutes. I mean, I have been known to try to upload a video, to TikTok, and it goes, no, it's over 10 minutes. I was like, oh crap, it's over 10 minutes by like 3 seconds. So I just go back into DaVinci, which is the video editing software I use, and I just cut off the last 3 seconds of the outro, so it'll fit into TikTok. It's not the most brilliant way to do it, but it works.
The threshold, yeah.
And you know what? On TikTok, whatever happens after like 3 to 6 seconds doesn't really matter, because no one watches past that anyway.
What I do like about tech at the moment is that it doesn't matter what camera you're looking to pick up or editing software you're doing, most of them now have a solution where you can go from aspect ratio of 6:9, which is your kind of standard, like normal ratio, to that vertical ratio.
Yeah.
And they're doing it really well, aren't they? Because that always used to be the pain point. It was, you've done this wonderful piece of content, but it's all been recorded as you would normally record it for, long form content. And then you've got to try and repurpose that for short form. And that previously was an absolute pain in the backside to do.
Yeah.
But nowadays, there is, dedicated pieces of software to do it. There's, the hardware itself has now got opportunities to record in both aspect ratios and keep them off at the same time. That it just seems like we're in a better position to be able to capture the data. That whole idea of capturing some piece of content and repurposing it, well, now that's been made even easier for you, because software and hardware has actually started to go, actually, that was a huge pain point for people. Here's a solution for you. So yeah.
And that's not, I still put onto TikTok in normal format, like in this format. I don't mess about, but DaVinci has got a tool that I've just not played with yet, which does turn it into the right aspect ratio. But that means rendering a second video, and it's just like, ugh. But
on your mapbot, that's going to take you 5 seconds. It will just fly
through it. It is quite embarrassing how quick it is. But yeah, so I need to play with that video editing tool as well, that aspect of the tool.
Definitely.
Ashley says, my best performing video on YouTube is 15 minutes long. Yeah, like 15 to 20 minute videos are great. If I'm going to sit and do a project or something, I normally put on like between an hour and 3 hours worth of history documentary type things. But yeah, normally when I'm sat browsing, 10 to 20 minutes is the type of video length I enjoy. Whereas anything past 60 seconds, my wife's not interested. But yeah, that's there's going to be an audience out there for everyone.
Yeah, definitely.
It's just finding how big that audience is, I suppose. Good morning, Rachel. Hope you're well. Paul says, hopefully it will save my bookkeeper pulling her hair out. QuickBooks Plus has timed out on her so many times. She spent almost 3 days processing these instead of the usual one. It is volume.
The paid's kind of, or the increase in the subscriptions paid for itself there, right? Like
definitely
3 days instead of one. That's you've already justified the price increase, haven't you? So and maybe utilizing some of the other features in QuickBooks Advanced will give you more savings. Batch updates, for example. Those sort of features there will help. So cool.
Yeah, definitely. Okay, so Aaron, we've got an update on the VAT digital handshake. So talk us through it. This kind of it bores me to the point I don't even get my phone to read it out to me anymore. Like,
well, ironically, this is one of those ones where, as a firm, we were discussing it only last week before, was it? And then suddenly it hit the news, and HMRC have basically taken away one of our solutions we came up with when we were talking about it in the firm. So just to keep everyone in the loop of what this means, at the moment, if you want to get a client to be VAT 64 rated, agent authorized, therefore you as the agent, you as the firm can file on their behalf and importantly talk to HMRC as well, then typically, if you think about how 648s have been working in the for the past, 5-6 years or so, the idea is that you would send a little request to HMRC. They'll send a code to the post to your client. The client will give you that code, then you're registered. And then when MTD came around, they had this whole new way of doing things, which they're calling the digital MTD or digital authorization, where you generate a link, they click on the link. As long as they've got signed up to HMRC portal, then they can accept the link. And instead of having codes floating around and having to send them via the post and all that sort of stuff, you were able to actually get authorized. The beauty at the moment is that even though your agent services account, which is a separate HMRC login, which is frustrating, but that's just the way it is, and your traditional HMRC portal with two separate logins, there was this kind of connection between the two, which was really beneficial, right? So, for example, when you first migrated from your old system to your MTD portal, all of those authorizations, all of those 628s came with it. So if you had VAT authorized from ABC Limited, when you went to MTD, that came through and it made things easier for you. And what we've also had the opportunity is, because those two are linked, we could go and have a choice of how we're going to get our clients VAT authorized. We could do the traditional route of telling HMRC, they send the code, we put the code in, and we connected, and then it would connect the dots together, and you'd have the authorization. Then we had the opportunity to, if the client has a digital a VAT account, they could then send this link, they would connect to it, and everyone's happy. Problem is, HMRC have just announced that they're getting rid of that link. Now, it's no surprise, is it? Because it must be a resource hog on HMRC's side. It must be, to them even having to send out a letter is a cost associated, right? Like, there is definitely reasons behind it, and I'm not frustrated by why they're having to do it, because we need to move on, we need to push it forward. It's just, as normal with HMRC, we've still not got that wonderful system, have we? There's still problems, there's still issues, we still not had this end-to-end solution that we've bring, and we've asked for software like Client Engager to come in and help us, and even they're being held back by HMRC not being ready to deliver on that. So yeah, ironically, literally only last week we were talking about how we've got this fallback, we'll continue to use the fallback for as long as it is, and then a week later HMRC is saying they're pulling the plug on the fallback. So it's not good. And the reason that it becomes frustrating is because, well, this is all the new way is about your client having that HMRC portal, right? That VAT portal. If they've got an MTD portal, no problem. It actually works pretty well. But what happens with those clients who don't have a portal?
we spend so much time on the phone to clients, talking them through, right, click here, click there, sign in. Right. We've now registered you for a government gateway you didn't know you needed. Now we need to link your VAT to the government gateway. Do this, do that, do the other. Oh, it's failed. Right. Okay. Let's try this way.
But the thing I would say is, like, and we're probably not supposed to do this, but we've had to resort to actually going through and actually pretty much setting them up our end for them to receive the activation code and then to try and finish it off their end, which is ludicrous. I mean, surely from an insurance point of view, we shouldn't be doing that anyway. But when we've got no choice and that's the only way we can get the client to set up, I just feel like it's just, HMRC haven't fully accepted how crucial that 648 process is at this point in time.
I think HMRC are just a bit misinformed on how tech savvy people are.
Yeah, exactly.
Like, a lot of business owners are not tech savvy. We haven't got, we aren't at this level yet where the only people that are business owners are millennials or below, or above or something. Like there's still a lot of people out there who don't trust the internet, don't trust online banking, don't trust emails. You know, HMRC are basically saying, well, tough. If you don't trust it, that's your problem. We know it's secure. We've done our testing. Accept it and move on. And we're the ones that are having to explain that to our clients, not HMRC.
Yeah, yeah. And in an ideal world, the new way is so much more efficient, right? You send that URL, they click on the button, they're in, boom. Like you can be registered so much more efficiently than the old-fashioned way, the traditional route. But I don't know. I just feel like it's a step too much to ask for accounting firms to easily be able to migrate over to the new way of 648s, when there's still a problem there, right? There's still an issue with it done. And just fill us in on Client Engage, because you guys were ready and waiting to release the solution, right?
Yeah, so so HMRC does have an API for MTD VAT authorization, where you can send the information required down the chute, as it were, down the API.
Yep.
They fire back the link that you send to your client. Beautiful. So we've built that and we're ready to use it. We're waiting for HMRC to certify it. Even when they do, I think we've got a falling down problem already. In that HMRC are doing more and more ID checks. So that if you're registering someone for VAT, like they're doing ID checks on those people. And if they then try logging into their gateway and they decide they're going to do a passport check or something, which seems to be happening more and more as well. So there's still going to be pain points. It's still not going to be as slick and smooth as we'd like. But in theory, you will be able to do it without going into the government gateway to request the agent authorization. But we're waiting on certification from HMRC. But to be fair to HMRC, that's not just them. Like we've been waiting for Google certification since November. Yeah. We've been waiting for Xero certification since November. Like, no, people insist on you being certified to use their APIs, and they do all the testing on your links. But then they're quite happy to take 3 to 6 months to do it, holding you as a product back.
Yeah, but you can also see why they want to be protective over it. So,
completely understand why. Yeah. But if you're going to put these rules in place,
you need a more slick
facilitated
certification process. Yeah. The thing about all that though is, maybe it'll get sorted in the next couple of months or whatever it's going to be. If that's the case, what do we do from the 16th of February, which is when this new rule comes into place?
Well, you go into the government gateway and inefficiently request it every time.
Yeah, literally Friday.
But at the same time, though, I had to question our developer several times on this API, because I don't understand, if this API is available, why no one else
has used it. Exactly.
Like there's longer standing practice management tools out there who have got 648, the old school API linked. Why have they not done the VAT one? So, but yeah, he's shown me it. It's definitely there, and it's been there for a very long time.
We shall see. But basically, from the 16th of February, it's about to get a lot more painful to get your VAT clients on board. So,
yep,
that's just the way we've got to deal with it, isn't it? Just the way it is. Shall we quickly catch up on our last couple
before we finish off? So Rachel says, how do I deal with the 95% of my clients? As we've just said, that is the way, accept it, basically, is HMRC's message. And Paul says, Paul says, typical HMRC pulling services before the new version is fully working. So I disagree with that comment to a degree, because it is fully working. Like the HMRC agent authorization process is working. The falling down part is the client who's essentially not tech savvy enough to create a login and then link the VAT. The tool itself does work, but is it as painless and dynamic and as efficient as it could be? Probably not. Like,
but isn't it the certification process that's not working? That's the bit that's not working, right?
it's working. It's just backlogged.
Ah, okay, fair enough.
So, the authorization process works. It works every time we use it, and it is more efficient than requesting something, waiting for 7 days to 10 days for a letter that might not show up because it gets lost in the post if it got printed and sent initially at all. So the online process is better, and it will be even better once we do the API. But it's relying on clients, and that's where it falls down.
Yep.
The need to register a government gateway, if you've not done that before, HMRC can't reference you in enough places, then you've got to do ID checks and stuff. Then you've got to go in and link the tax services that you want to link to your government gateway before you can then authorize us. That's the problem. It's the client involvement that's an issue. So yeah. Right. On that note, though, we are past our time, so we will call it a day. Aaron, what have you got coming up this week for people to watch out for?
This week's quite a chilled week, other than trying to get this streaming that's going on Thursday. So yeah, other than that, it's just literally trying to get as much work done as possible, trying to catch up as much as we can, because it's only the week after that we're at QuickBooks Get Connected, isn't it? So
it is
come around very, very quick, hasn't it? This one has. What about yourself, Jan?
No, I have got to decide what I'm going to do a video on this week. Not quite decided yet. And I have got, I don't know when it's coming out, but I know Firm Up season 2 is coming out from the team at Sage and Go Proposal. And I was a guest on that recording. So there'll be about, I think there's 6 episodes coming out, and I'll be on one of those episodes. So I'm not sure when it's coming out yet, but the first one lands this week. I believe it on the 15th. So yeah, and that's why I was at Sage head office back in November. Everyone started panicking, like Johann's moving from QuickBooks to Sage, or Johann's selling Client Engager to Sage. But no, none of that. I was just there to do a recording. But did I cause some trouble by posting about that on LinkedIn? Oh, that got some traction. If nothing else did, that one did. But yeah, so thank you very much to everyone for tuning in and commenting and sharing your opinions and asking your questions. Great to be able to help Paul and League Saint out with their questions today. That's what we're here for, as well as to share the news and our insights and our experiences. So yeah, thank you very much to everyone for tuning in. We will see you all next week at 8:30.
Cheerio.
Goodbye.